Hey Samson, this is Riya from SAMAYA, MCQ 101 CA Inter. Which is the primary objective of analytical procedures? Analytical procedures is comparison of financial information to non-financial information used in the overall review stage of an audit. What is the review stage of an audit? It's where you have gained or obtained the sufficient appropriate audit evidence and you're discussing with the engagement team to draw the conclusions with all the written representations and sufficient and audit evidence that was obtained during the audit. We'll see the options now. To help in corroborating the conclusions drawn from individual components of financial statements, as review stage is something that deals with the conclusions from the appropriate audit evidence that was collected during the audit. To reduce, we'll see second option, to reduce specific detection risk. It is done throughout the audit. To direct attention to potential risk areas, it is done while planning the audit. To satisfy doubt when the question arises from a client's ability to continue, that is going concern, it is also done during the audit. So the most appropriate answer is option A. Hey Samfam, this is Riya from SAMAYA, MCQ 102 CA Inter. Auditor compares gross profit ratio with that of previous year. And it is discovered that there has been a fall in the ratio. It is talking about comparisons of ratios and all. This is an example of a analytical procedure. We know analytical procedures is comparison of financial and non-financial information. Option B, tests of controls. That is, you see, this is a straight no because he's not testing any kind of internal controls. So not B. Walkthrough test. They're not seeing how effective a procedure was also. So option C is also not right. Audit sampling, it's not an audit sampling. So we'll revisit option A, analytical procedure. They have compared a non-financial information, that is a ratio, with that of a gross profit number. That's a financial information. So option A, analytical procedure is most appropriate answer. Hey Samfam, this is Riya from SAMAYA, MCQ 103 CA Inter. Which assertion is common? That is what the management is claiming in its financial statements or written representation among the statement of profit and loss account and balance sheet captions. You see, balance sheet contains what? Assets and liabilities, but those assets and liabilities do not contain in profit and loss account. So we have to check out of these four which is mostly applicable to. You see, we don't check existence with regards to statement of P&L account, neither the valuation and nor the measurement of that asset or liability. So we'll see only these three things with regards to only assets and liabilities. We'll see completeness of information with regards to transactions, assets, liabilities. So option C is the most appropriate answer. Completeness is assertion in common, which was for both P&L account and balance sheet. Hey Samfam, this is Shreya from SAMAYA, MCQ 104 CA Inter. Direct confirmation procedures are performed during audit of accounts receivable balances, that is debtors, to address the following balance sheet assertion. What assertions we want to comply? We want to comply rights and obligation with that direct confirmation process? No, we have to check any kind of agreements, etc. Existence, yes. Existence of that amount or not. Valuation, we don't do any kind of valuation there. Only the transactions that were done during the process. Completeness, we do calculations or recalculations, not the through direct confirmation process. So option B is most appropriate answer. Will get the assertion of existence when we do direct communication or direct confirmation procedures for the accounts receivable balances. Hey Samson, this is Riya from SAMAYA, MCQ 105 CA Inter, where no reply is received during the performance of direct communication procedures as a part of audit of accounts receivable balances. You see, we are auditing the debtors balances through direct confirmation procedures to check their existence. For that, in response, we have got no reply. What we have to do? We have to perform additional audit procedures. So option A doesn't exist. Option B, additional testing, including subsequent collections testing that and agreeing the detail of the respective balances to the customer's remittance advice. We have to check when we have got no reply only for that customer. We have to check. We have to do audit procedures only with regards to that alone single customer. We need not go a detailed analysis of all the transactions, etc. So option B stands most appropriate answer. Hey Samfam, this is Shreya from SAMAYA, MCQ 106 CA Inter. Obtaining trade receivables aging report and Analysis and identification of doubtful debts. You see, they are checking out the depreciation of trade receivables there, right? So I think they were checking the values of the trade receivables is performed during the audit of accounts receivable balances to address the following balance sheet assertion. Valuation. Obviously, they are checking the values of the trade receivables. Yes. Rights and obligation. No, they should have checked agreements, existence, direct confirmation reports, completeness with regards to ratios analysis and subsequent transactions there. So option A stands more appropriate. Yes, Sampham, this is Shreya from Samaya, MCQ 107, CA Inter. Observing inventory being counted and personally performing test counts to verify counts is performed during the audit of inventory balances to address the following balance sheet assertion. We'll see the first. Rights and obligations, we have to check for that agreements, not the counting procedures. Valuation, for that we have to segregate the inventories into higher categories or obsolete or non-moving. For the completeness, what you have to do, you have to check the subsequent purchases or sales. And option D, existence, yes, you have to do the physical counting or test counts to check the existence of the inventory. So option D is most appropriate answer. Hey Samsung, this is Shreya from Samaya MCQ 108 CA Inter. Wages paid to workers would qualify as revenue expenditure, capital expenditure, revenue or capital expenditure depending upon facts and circumstances, none. You see, if the workers, it depends upon the how on what asset the workers are working on. If they're working on regular stock or inventory, that was could be qualified as a revenue expenditure. But if they're working on any kind of asset which is a qualified asset like PPE or any kind of construction of building, etc., that portion which is directly attributable to that asset is a capital expenditure. So option C is most appropriate answer, as it could be a revenue if they work on the stock or etc. or inventory. Capital expenditure if they work with regards to any kind of qualified asset. Depending upon the facts and circumstances, it is would be qualified. Option C is most appropriate answer. Hey Sampham, this is Shreya from Samaya, MCQ 109 CA Inter. During the course of audit of intangible assets, expenditure incurred during the following phase is not capitalized. That is, that expenditure was charged to P&L. Development phase. Here we would capitalize that to the intangible asset. In research phase, yes. In the all the expenditure that the company or the entity that had expended with regards to that intangible asset is charged to P&L account. Option B is the most appropriate answer. Hey Sampham, this is Shreya from Samaya, MCQ 110 CA Inter. Search of unrecorded liabilities is performed during the audit of current liabilities. That is, we are checking whether all the liabilities have been given to that account balance or not. To address the following balance sheet assertion, valuation. It's not with regards to valuation. For that, we have to check about any kind of litigations, etc. About rights and obligations, we should have checked agreements and all. For the existence, we have to check the direct confirmation reports and completeness. Yes, they wanted to check whether all the current liabilities were recorded or there were any unrecorded liabilities. So option D is the most appropriate answer. Hey Samson, this is Riya from Samaya, MCQ 111 CA Inter. Cutoff testing is performed during audit of sales to address the following assertion. Cutoff testing is done when all the sales transactions that were occurred in that particular financial year or to that financial statements were prepared was cut off. That any further or date that was beyond that financial period should not be included. We have to check that occurrence, no measurement, it doesn't regards to that. Cutoff is option C is most appropriate answer. Hey Sampham, this is Shreya from Samaya and CQ 112 CA Inter. ABC is a shareholder of XYZ Limited, which declared a dividend on April 10th, 2021, that is in financial year 2021-22. And ABC, that shareholder, when it has to recognize that dividend income, it has to recognize in the year in which the dividend was declared. So option C here, option C, financial year 2021-2022. Hey Samfam, this is Shreya from Samaya MCQ 113 CA Inter. All inventory units held by audit entity, that was all the units that were held by entity that should have been recorded, have been recognized. See, all inventories that were held and should have been recorded have been recognized in its financial statements. This assertion involved is regards to completeness. You see, they were not testing the count of that. They are checking the completeness, not rights and obligations. For rights and obligations, we have to check the agreements, and for the valuation, we have to check the whether they were absolute or non-moving, etc. So option B is the most appropriate answer. That all the things were held that have been recorded and recognized. Option B, completeness. This is Shreya from SAMAYA MCQ 114 CA Inter. Which of the following is not an example of revenue expenditure? That is out of which is a capital expenditure. Salaries and wages of employees engaged directly or indirectly in production. No, when they were engaged in production, it's a revenue expenditure, but if they work for a qualified asset, then it could be capitalized. So, not option A, repairs and maintenance of fixed assets. No, that was also a revenue expenditure. Legal and professional expenses also charged to handle the revenue expenditure. Development expenditure on land. You see, they have given this indirectly. You have to understand that on land, what expenditure we put? We put some infrastructure development activities, right? Like building, which is a qualified asset. So, option D is the most appropriate answer, which is not a revenue expenditure. Hey Samfam, this is Shreya from Samaya MCQ 115 CA Inter. Useful life of assets is given in which schedule of Companies Act 2013? 2, 4, 5, 7. It was given under Schedule 2, the useful life of assets. For under Schedule 1, they have given MOA, AOE. 2, about the useful life of assets and depreciation rates. 3, format of balance sheet and P&L. 4 is with regards to provisions of independent directors and their remuneration. 5, managing director, whole time director, and manager appointment. 6, infrastructure projects, and 7 is corporate social responsibilities. So here they have given useful life of an assets. It was given under Schedule 2 of Companies Act 2013. Hey Samfam, this is Shreya from Samaya MCQ 116 CA Inter. Dash are charges against profit that were expenses to provide for known liabilities. That is, they are reasonably assured that those would actually occur, for which amounts cannot be determined. They know that a part of an amount, but they don't know how much the amount is. What are those? What are those expenditure or charges that were given in the P&L account? Contingent liabilities. For contingent liabilities, they don't know whether we have to pay or not, because it is the outcome that depends upon a future event, future specified event. So not A. For provision B, option B, provision, they know that there's a liability that existed, but they don't know the accurate amount. So most appropriate answer is option B, provision. Hey Samfam, this is Shreya from Samaya MCQ 117 Enter. Which of the following is not a type of modified opinion? You see, what are the types of modified opinions? Is a qualified opinion, adverse opinion, and disclaimer of opinion. But negative opinion is not a type of modified opinion. So option D is the most appropriate answer. Hey Samfam, this is Shreya from Samaya MCQ 118 CA Enter. The auditor shall express what opinion when the auditor, having obtained sufficient appropriate audit evidence. When he obtains sufficient appropriate audit evidence, he cannot issue disclaimer of opinion and concludes that misstatements are material and pervasive to financial statements. What, as per SA 705, when the misstatements were material with regards to financial statements were material and pervasive, the auditor has to issue an adverse opinion. So option A, adverse opinion, is the most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 119 CA Inter.
SC 700 requires the use of some headings which intended to assist in making auditor's report. That is, they are talking about the format of the audit report that they have discussed in SC 700 series, and whether that include which of the following includes that specific headings: key audit matters, basis of opinion, date, all of the above, all of the above. All these three were included in that format that was given as per SC 700. Option D is more appropriate answer. Please confirm this is Shreya from Samaya MCQ 120 CA Inter. The opinion section of auditor's report shall identify the entities whose financial statements have been identified, state the financial statements have been audited, identify the title of each statement comprising financial statements, be all of the above. Now we'll see the audit report of Tata Motors here. This is the opinion paragraph. They have stated that the audit financial statements have been audited and they have identified the entity name which they have identified, which they have audited, and it had given all the statements which comprise of financial statements like balance sheet, P&L account, and including other comprehensive income, standalone statement of changes in equity, and cash flows. So all the three were mentioned in that opinion section. So D, all of the above is the appropriate option. Please confirm this is Pia from Samaya MCQ 121 CA Inter. PQR and Associates has three partners. The firm had already having 60 public companies, and now the firm got an offer for three companies, out of which one is a dormant company, 1% company, and a private company having paid up share capital 90 CR. You see, each auditor could get up to 20 companies, but excluding any dormant companies, 1% companies, and private company having paid up share capital up to 100 CR is exempted. They can go. So they can accept all three companies. So option D is most appropriate answer. Auditor can accept audit of all three company audits being offered, where these three companies do not come under that ceiling limit, so they are not counted under 20 companies. Hey Samson, this is Priya from Samaya MCQ 122 CA intern. Any casual vacancy in the office of a cost auditor? Okay, casual vacancy of cost auditor had occurred due to whether resignation, death, or removal, and shall be filled by board of directors within how many days? It has to be filled by board of directors within 30 days of such occurrence of casual vacancy. So option A is most appropriate answer. In order to sum up all the time limits in our audit syllabus for May 2023 exam, do check out the time limits and board limits and monetary limits video that had been uploaded in our channel for a quick wrap or a snapshot of all such limits. It would be very helpful in this last month to just quickly wrap up all the things. To check that. Hey Samson, this is Priya from Samaya MCQ 123 CA Inter. As per section 139(7), it provides that in the case of a government company or a deemed government company or a state-owned government company, the first auditor shall be appointed by CNDG within how many days? We have to appoint the first auditor. CNDG has to appoint the first auditor within 60 days. So option C is the most appropriate answer. In order to sum up all the time limits in the audit, please do check out the time limit and the board limits and monetary limits video in our YouTube channel for a quickly wrapping of all the limits in this last month, which would be very helpful for your examination. Hey Samson, this is Riya from Samaya MCQ 124 TA Inter. As per section 139(1) of Companies Act, that every company shall at its first annual general meeting appoint an individual or a firm as an auditor who shall hold office from conclusion of that meeting, which meeting, till conclusion of sixth meeting, and thereafter till conclusion of every sixth meeting. We'll see the Bear Act here. For what we were mostly known for this is till the conclusion of sixth annual general meeting, but we don't read the next or later part, that is thereafter till conclusion of every sixth meeting. It's in the Bear Act from MCA site here. So option A is most appropriate answer. So here option A is the most appropriate answer. We tend to do B would be the correct answer. No, but option A, this phrase is also there, which we do not read
often. Option A is the most appropriate answer. Hey Samsung, this is Shreya from SAMAYA, MCQ 125 CA into the Judge acting as a statutory auditor for K Limited for past 5 years, and K Limited, which is unlisted and had no public borrowings. The rotation of auditors is required for K Limited if it's paid up share capital. Okay, they're asking about the rotation of the auditors applicability. For that, what are the applicable provisions for rotation of auditors? A class of company which is including listed companies. That is, if it is a listed entity, then rotation of auditors is applicable. What is rotation of auditors? Individual for 5 years and a firm consecutive 2 terms of 5 years, that is 10 years. And such class excluding OPCs, companies and small companies. And okay, you check out the amendment. They had got an amendment with regards to small companies, turnover limits and all. That is 4 CR, 40 CR turnover that has been changed as soon as it touches 4 CR and 40 CR. Till it touches 4 CR paid up share capital and 40 CR turnover, it's a small company. And that's an amendment there. Please make a note out of it. And all the unlisted public companies, that is what the case with K Limited here, till it touches or 10 CR or exceeds 10 CR, rotation is applicable for that company, and 50 CR for the private limited. And if the company having any kind of public borrowings, 50 CR and above, that is as soon as it touches 10 CR paid up share capital, rotation is applicable. So this is equal to or more than 10 CR. Option B is most appropriate answer.
Hey Samsung, this is Shreya from SAMAYA, MCQ 126 CA Inter. The first auditor of S Limited was appointed by Board of Directors. Okay, the first auditor has to be appointed by Board of Directors only. And one of its employee was opinion that the remuneration of that first auditor would be decided by only by members. No, the remuneration of the first auditor is decided by the Board of Directors. Appointment was also made by the Board of Directors. So employee's contention is wrong, and we'll see the options here. The opinion of Mr. Y is incorrect because remuneration of first auditor may be decided by Board of Directors. Option D is most appropriate answers. Hey Samsung, this is Shreya from SAMAYA, MCQ 127 CA Inter. You see, they have given a data about 4 companies, and they're asking us out of these 4 companies, which companies required to constitute audit committee. We'll see the audit committee applicabilities now. You see, when a public company touches 10 CR paid up share capital, it has to constitute audit committee. When its turnover touches 100 CR, it has to form a audit committee. When its borrowings were more than 50 CR, then it has to constitute an audit committee. See, if it touches 100 CR, we have to constitute audit committee because they have given turnover limits here. See, Z1 has to constitute audit committee, Z1, and Y2 also more than 100 CR. It touched 100 CR, so 180, it has to make audit committee Z1 and Y2. Let's see, Z1 and Y2, option D is the most appropriate answer. Hey Samfam, this is Shreya from SAMAYA, MCQ 128 CA Inter. You see, a firm of chartered accountants who were appointed as an auditor in TR Limited had resigned. That is, in TR Limited, a casual vacancy had occurred. Now, who will appoint the auditor for TR Limited? Board has to fill the casual vacancy. So board will appoint, and they have to be approved by the shareholders within 3 months in the next AGM. So option D stands here, right? Option D is most appropriate answer. Hey Samsung, this is Shreya from SAMAYA, MCQ 129 CA Inter. You see, there was a public limited company which has paid up share capital of 20 CR. And they are asking, they had occurred a casual vacancy and they have appointed an auditor. And for that auditor, who shall check the qualification and experience of that auditor? Whether they have to be checked by members, board of directors, independent directors, or audit committee. For that, we have to check the applicability of the audit committee. Why they have given paid up share capital here? When the paid up share capital of a public limited company touches 10 CR, audit committee is applicable. So audit committee has to check the qualifications and experience of the auditor. So B is the most appropriate answer. Hey Samson, this is Shreya from SAMAYA, MCQ 130 CA Inter. A private limited company had a paid up share capital of 65 CR, and which one of the following statement is correct with regards to rotation of auditors? When is rotation of auditors applicable for a private limited company? When it paid up share capital touches 50 CR, then rotation of auditor is applicable. So option B holds true, as the paid up share capital is more than 50 CR. The rotation is applicable. Rotation of auditors is applicable. Option B is most appropriate. For Hey Samfam, this is Shreya from SAMAYA, MCQ 131 CA Inter. A firm of chartered accountants was appointed as auditor for a private company whose paid up share capital is 58 CR. They cannot be, the auditor firm cannot be reappointed as auditor because rotation of auditors is applicable, because as soon as the paid up share capital touches 50 CR for a private limited company, rotation is applicable. As they have already done 2 terms of 5 consecutive years, they cannot be appointed, and a cooling period of 5 years were there. And they're asking that after completion of that, till how many years they cannot be reappointed. That is 5 years. Option B is the most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 132, CA Inter, a director of Y Limited, which is not a government company, was of opinion that the first auditor must be appointed by members. No, it has to be appointed by board of directors, as it is not a government company. Within how many days? Within 30 days. So the first auditor of Y Limited shall be appointed by board of directors within 30 days from date of registration. So option A is more appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 133, CA Inter. Which among these refers to a record of audit procedures performed, relevant audit evidence that was obtained, and conclusions that were reached? Audit techniques, no. Audit evidence, no. Audit documentation, yes. Audit documentation is a record of all the audit procedures that were performed, audit evidence that was obtained, and conclusions reached. Option C is the most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 134, CA Inter. Which among these may be defined as one or more folders or other storage media in physical or electronic form, contains the records that comprise the audit documentation for a specific engagement? They are talking about what's the folder name which contains audit documentation, audit file. This audit file is defined as a folder, whether it's physical or electronic form, comprised of audit documentation. Option A is the most appropriate answer. And audit evidence is a part of audit documentation. Complete memorandum is also a part of audit documentation, and no word such as audit folder at all. So option A, audit file, is the most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 135, CA Inter. As per SQC 1, an appropriate time limit within which to complete the assembly of final audit file is ordinarily not more than how many days after the date of audit report? It is the final assembly of audit file has to be completed within 60 days. Option B is the most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 136, CA Inter. A request that the conforming party respond directly to the auditor only if it disagrees. That is, negative confirmation request. That's a negative confirmation request. Positive is you have to confirm even if it's right or wrong. A non-response is not responding. Exception is there's a deviation in amount. So this is responding only if the confirming party disagrees. This negative confirmation request is widely used when there was a lot of transactions and where the exception rate was very low. Hey Samson, this is Shreya from Samaya, MCQ 137, CA Inter. Auditor's judgment as to sufficiency. What sufficiency? Or what's the responsibility of the auditor? The responsibility is to obtain sufficient and appropriate audit evidence. Sufficient with regards to the quantity of the audit evidence he has to obtain. That quantity is dependent or affected by what all factors? Materiality, yes. More the material, more the material, more the materiality, lesser the size of the audit evidence. More the risk, more the size. Size and characteristics of population. If population has a bigger size, a large audit evidence has to be obtained. So all the three were affected sufficiency of the audit evidence. So D, all of the above is the most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 138, CA Inter. Which of the following is not an audit procedure to obtain audit evidence? You see, we know there were few systems or few ways where auditor can obtain audit evidence like inspection, inquiry, observation, reperformance, recalculation, etc. You see, out of these, what are not an audit procedure? Inspection, yes, auditor do inspect some documents or agreements. Observation, he do observe the internal controls that were performed or the procedures that were performed in an entity, external confirmation to confirm the balances. Option D, internal control. Internal control is the responsibility of the management, not the auditor. To establish an internal control mechanism is the responsibility of management. So option D is the most appropriate answer, which is not a audit procedure. Hey Samson, this is Shreya from SAMAYA, MCQ 139 CA Inter. Regulating body in case of banks. RBI is a regulating body, right? SEBI is for the companies where they were listed in some stock exchanges, IRDA for insurance company, RBI for banks. Option C, RBI. Hey Samson, this is Shreya from Samaya, MCQ 140 CA Inter. Which of the following is a fund-based advance? Terms loan, cash loan, demand loan, all of the above. All of them are fund-based advances. What are non-fund-based advances? Like letter of credit, bank guarantee, which do not include any fund or transfer of any funds. Here, the funds transfer from the bank account to the customer account. So, D, all of the above is the appropriate answer. Hey Samson, this is Priya from Samaya, MCQ 141, CA Inter. Which of the following is not a classification of NPA? Impaired. This is not a classification of NPA. So option A would be the most appropriate answer. Substandard, yes, substandard when it has been an NPA for up to 12 months, it's a substandard. Doubtful when more than 12 months, up to 3 years. Loss when external inspectors or somebody identifies that as a loss asset. So option A is more appropriate answer. Hey Samson, this is Priya from Samaya, MCQ 142, CA Inter. Engagement team discussions are usually done at which stage of bank audit? With regards to appointment, no. While developing an audit plan, yes. In audit plan, what do? We usually generate the audit procedures or design the audit process, right? So it was mostly all the team engagements were done only at the time of mostly at the time of developing an audit plan. B is the most appropriate answer. Framing an audit program is that's what happens in the audit plan also itself. It was mostly giving instructions to the engagement team members, which were done by senior manager or in charge key engagement partner. Issuing audit report, only the significant matters were discussed there, or disagreements and all. Even at this stage, engagement team discussions happen, but mostly at this stage, developing an audit plan, it happens. Hey Samsung, this is Shreya from Samaya, MCQ 143, CA Inter. The auditor of a nationalized bank is to be appointed by, it has to be appointed by Board of Directors with prior approval of RBI. We'll see those provisions now in our bank audit. Authority appointing auditor. Prior approval of RBI is needed when a banking company, for a banking company, AGM or whether shareholders has to appoint with the prior approval of RBI. For nationalized bank, Board of Directors with prior approval of RBI. And SBI, C&AG shall be appointed with prior approval of central government. RRB is concerned bank with prior approval of central government. So here, option A, the concerned bank through its board of directors appoints the auditor of a nationalized bank. Option A is most appropriate answer. Hey Samsung, this is Shreya from Samaya, MCQ 144, CA Inter. The LFAR has to be submitted before 30th April, 31st March, 30th June, 30th September. It is 30th June of every year. You'll find it in our PDF here. Notes, LFAR is to be submitted before 30th June every year. It has to be submitted before 30th June. So C is the most appropriate answer. Hey Samsung, this is Shreya from Samaya, MCQ 145, CA Inter. In case of fraud involving amount less than 1 year, the auditor should report to central government, RBI, bank, boards, audit committee, C&AG. You see, when the fraud was less than 1 year or more than 1 year or equal to 1 year, auditor, what he has to do, he has to communicate to that to banks or audit committee. But if the fraud is equal to or more than 1 year, you also have to report to central government. And since it's only less than 1 year, they have to report it to the board or audit committee. Option C is the most appropriate answer. But if it is more than 1 year, even though the auditor informs to the audit committee or board of directors, the correct answer is central government if the fraud is equal to 1 year or more than 1 year. For this, it's less than 1 year. So option C, board or audit committee is the most appropriate answer. Hey Samsung, this is Shreya from Samaya, MCQ 146, CA Inter. Which of the following is in non-funded facilities? That is, the funds, the amount do not transfer from bank's account to the customer or client's account as sanctioned by any bank. Bank guarantees, bank guarantees, letter of credit, they were non-funded facilities. Term loan, staff advances, bank overdraft, there are funded facilities. So option A is most appropriate answer. Okay, Sampham, this is Shreya from Samaya, MCQ 147, C into. The term drawing power is associated with which of the following facilities are sanctioned by the bank? Letter of credit? No, it's non-funded activity. Term loan, staff advances? No. Cash, credit limits, bank OD, these were the things for which drawing power is most associated with, like drawing power, sanction limit, etc. Option D is the most appropriate answer. Hey Samvam, this is Shreya from Samaya 146 MCQ. The drawing power in case of consortium advance. Consortium advance is a group of banks form together and they give loan to a bigger entity or a large entity. Is computed and allocated to members banks by by proportionately or led bank borrower RBI. It is divided by the led bank. That is, it is allocated by the led bank. Even at the recovery time also, what is who is led bank? But led bank is under this consortium who gave more advance, who has more proportion of loan. So option B is most appropriate answer. Hey Samfin, this is Riya from Samaya MCQ 149 CA Inter. A Limited has been assigned a cash credit limit of 20 lakhs as against book debts furnished as a security. What kind of security creation is this? Pledge. No. Pledge is something you're giving to bank to hold them. That is, you're transferring the possession. Pledge. P for possession. You're transferring the possession. Mortgage. Mortgage is something you transfer the right when you don't pay the bank. Okay, there was a risk there. When you don't pay the bank, then they have a right on that property. So it's not a mortgage. Assignment is something where you give right to collect money that someone has or someone or other third party owes you. Your book debts were debtors, right? Debtors was somebody who owe to you. So this is a mere assignment. Set off is something when you don't pay, the balance in your account will set off with the loan that you have to pay to the bank. So option C, assignment is most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 150, CA Inter. Mrs. Reshma availed a personal loan of 5 lakhs and a vehicle loan of 60,000. She was depositing EMI in her vehicle account but not made payment towards personal loan. Which of the following facilities should be categorized in NPA? For NPA, all the assets have to be categorized as NPA. You have to not check loan wise, you have to check individual wise, that is customer wise. So all the loans that Reshma had becomes an NPA if any loan of Mrs. Reshma becomes an NPA. That is, since her personal loan is becoming NPA, even though she pays vehicle loan, that would also become an NPA. That would also be an NPA because it's under same customer ID, Mrs. Reshma. So option D, both active and personal loan would be treated as NPA. Samfam, this is Shreya from Samaya, MCQ 151 CA Inter. Public enterprises. Public enterprise was such enterprises in which government has a stake over it. Are required to maintain commercial accounts, okay, and are generally classified under 3 categories. They're asking about the public enterprises categories. Which of the following is not a category relating to the above? Departmental enterprises. In They were a category of public enterprises, and statutory bodies, corporations, specific statutes, and financed by government, they were also public enterprises. Government companies set up under Companies Act, also public enterprises. The charitable trust, no. We could have also private charitable trust also. There were a wide kind of charitable trusts that were private also. So option D, charitable trusts were not a category of public enterprises. Option D is the most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 152, CA Inter. Article 151 requires that reports of C&AG relating to accounts of union government or state government shall be submitted to whom? It shall be submitted to President or Governor, who shall cause them to be led before House of Parliament or state legislature. So President and Governor, option A is most appropriate answer. Hey Samfam, this is Shreya from Samaya, MCQ 153 CA Inter, which aims at ascertaining that the expenditure incurred has been on the purpose for what the grant and appropriation has been provided.
That is, they're checking the purpose for which it has been given or appropriated, whether that was expended for that purpose only or not, and that amount does not exceed that appropriation made. They're checking the purpose and they're checking the limit with regards to a fund that was given as a grant. This is mostly used in trust or schools, that kind of institutions where audit against provision of funds. It is mostly like an audit with regards to how well, whether the amount was spent in a right way or not, whether effectively or economically or not. So option A, audit against provision of funds, is aims at ascertaining that the expenditure incurred has been for that purpose of which the grant and appropriation had made. So option A is most appropriate answer. Hey Sampham, this is Riya from Samaya, MCQ 154, CA Inter. The auditor of sole proprietor concern is appointed by whom? It was appointed by sole proprietor himself, yes. And it's for government company, it appoints for government company. For nationalized bank, so its board of directors would appoint, and for RRBs, a concerned bank would appoint. For sole proprietor, he himself appoints the auditor of sole proprietor concern. Option C is most appropriate answer. Hey Samson, this is Riya from Samaya, MCQ 155 CA Inter. Every LLP would be required to file annual return. In which form? They're asking about the form. Form number 11. Form number 11 is annual return. Form number 8 is statement of accounts and solvency. That's mostly like P&L account. And form 9, there doesn't exist. They need not submit, LLP need not submit form 9. Form deepen, there's no form called deepen. You have to submit DIR 3 for deepen, that is designated partners identification number. So this is no form that's called deepen here. So option A, form 11 is for annual return. For your syllabus, you have to remember only these two. Form 11 is for annual return. Form 8 is for statement of solvency and accounts and solvency. Hey Samsung, this is Shreya from Samaya, MCQ 156 CA Inter. In addition to audit certificate, auditor of cooperative society has to give two sets of questionnaires called internal control questionnaires, audit supplements, audit memos, memorandum reports. The auditor of corporate society has to answer audit memos. Option C is most appropriate answer. He has to give audit certificate plus he has to answer audit memos. Hey Samson, this is Shreya from Samaya, MCQ 157 CA Inter. While conducting audit of local body, the auditor's areas of audit do not include budgetary procedure, expenditure control, accounting system, dispute resolution. You see, this is a straight question where the auditor do not have scope with regards to dispute resolution. Option D is the most appropriate answer. Hey Samson, this is Shreya from Samaya, MCQ 158 CA Inter. After a government expenditure, that is some expenditure was incurred by government, and the accounts are closed and the appropriation accounts are prepared, which are scrutinized by CNDG President, Public Accounts Committee, Parliament. It was those accounts were scrutinized by Public Accounts Committee. CNDG audits all the government accounts and then submits to the president. This is CNDG does audit and submits to president. All the appropriation account was scrutinized by Public Accounts Committee. Option C is most appropriate answer. Hey Sampham, this is Shreya from Samaya, MCQ 159. CA Inter. Which of the following is not correct? A, 18 related party disclosures, yes, right. A is 10 PPE, yes. A is 28 impairment of assets, yes. A is 16 is borrowing cost. A is 26 is intangible assets. So option D is the option which is not correct. So it's the most appropriate answer. Hey Sampham, this is Shreya from Smaya, MCQ 160 CA Inter. Which of the following items should not be treated as an asset? As per AS 26, AS 26 that talks about intangible assets. Computer software, it could be treated as an intangible assets. Internally generated goodwill should not be recognized and it's an intangible asset. Fishing license can be, brand names can. So option B is most appropriate answer, that internally generated goodwill cannot be treated as an intangible asset. Hey Samson, this is Ria from Samaya, MCQ 161 CA Inter. Section 52 of Companies Act states that securities premium account can be applied by company for one of the purposes mentioned below. Which of the following is correct option? So they are saying that security premium account can, what are uses of securities premium account? First of all, bonus issue, writing of preliminary expenditure, writing of issues expenditure for shares or debentures, buyback of shares, pay premium on redemption of debentures. These are the uses of securities premium account. We'll see whether that exists here or not. Loss to adjust loss of revaluation of assets, no. To pay dividends of equity shareholders, no. Provide a premium payable on redemption of preference shares, yes. Option C is most appropriate answer. To use it as capital, working capital, no. Option C, securities premium account can be used for providing premium payable on redemption of preference shares. Option C is most appropriate answer. Hey Samson, this is Shreya from Samaya, MCQ 162, CA Intern. CAR illustrated to his team the utility of audit program, that they can be retained and enhanced only by keeping the program as also client's operations and internal control under recurrent assessment. That he's saying that the audit program should be assessed recurrently. Recurrently, they are talking about time to time. That is like periodic. What kind of attribute of audit program is highlighted here? A static review, no. They are recurrently being assessed, right? It's mostly periodic review. Option C is most appropriate answer. Hey Samson, this is Shreya from Samaya, MCQ 163 CA Inter. A firm of chartered accountants has an extensive understanding of code of ethics. Which of the following do not form part of a fundamental principles of the code of ethics? What are the fundamental code of ethics? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. These you could write it from SQC1. These were all the fundamental ethical requirements. And out of which, integrity, yes, it's a fundamental principle. Professional competence and due care, yes. Professional skepticism, no. Professional behavior, yes. Option C, professional skepticism do not form a part of professional fundamental principle. Option C is most appropriate answer. Hey Samson, this is Priya from Samaya, MCQ 164 CA final. Which of the following is not an event or condition that may cast significant doubt on entity's ability to continue as a going concern? Loss of key management without replacement cast a doubt on going concern. Adverse key financial ratios cast a doubt on going concern. Inability to pay creditors would cast a significant doubt on ability of the entity as a going concern. Currently, a profit turns to loss after providing depreciation. Means that is a depreciation loss. This doesn't a mere loss. Do not cast a doubt or significant doubt on entity's ability to continue as a going concern. Option D is most appropriate answer. Hey Samson, this is Shreya from Samaya, MCQ 165 CA Inter. The auditor found that the accountant had entered fake invoices with regards to credit purchases which are amounting to 55 lakhs, and all that amount was cleared for payment to a fake creditor. This is a kind of fraud, right? Then now the auditor has to report to whom? He has, since the fraud amount is less than 1 year, he should report it to the board of directors or the audit committee. So option C is most appropriate answer. Hey Samson, this is Ria from Samaya, MCQ 166 CA Inter. They have given us two statements which we have to see whether they were true or false. A capital reserve can never be utilized for writing down of any fictitious assets or losses. No capital reserve can be used to write off any kind of fictitious assets like revaluation, surplus, etc. And so option statement 1 is not correct. Statement 2, the amount of securities premium or capital redemption reserve account can be only used for the purpose specified in section 52 and 55 of Companies Act respectively. Yes. Option statement 2 is right. So option B, only statement 2 is correct. Option B is most appropriate answer. Hey Samson, this is Ria from Samaya, MCQ 167 CA Inter. The term internal financial controls basically refers to policies and procedures put in place by companies for ensuring, you see, internal financial controls were those controls that was with regards to all the activities for preparation of financial statement as per applicable financial reporting framework. We have
Also discuss the difference between controls, internal controls and internal financial controls in our keyword kit series. I think if I'm not wrong, it is keyword kit 4. To check that out. Now we'll move on to this MCQ. IFC were referring to what? Reliability of financial reporting, yes. Effectiveness and efficiency of operations, yes. Compliance with applicable laws and regulations, yes. Option D, all of the above. Option D, all of the above is the most appropriate answer. Hey Samsung, this is Shreya from SAMAYA, MCQ 168, CA Inter. The company and anything out of this will abide with provisions specified in Schedule 4, which lays down code of conduct of independent directors. Who have to follow the code of conduct of independent directors? Obviously, independent directors. Then A is most appropriate answer. Hey Samsung, this is Shreya from SAMAYA, MCQ 169, CA Inter. The tools and techniques that auditor use in applying the principles of data analytics are CATs, computer assisted auditing techniques. B is most appropriate answer. Hey Samsung, this is Shreya from SAMAYA, MCQ 170, CA Inter. Which among these exists when an internal control is missing or it's not operating effectively to prevent, detect a misstatement in a timely manner by the management? It's a control deficiency. Option D is the most appropriate answer. Example, this is Shreya from SAMAYA, MCQ 171, CA Inter. Dash requires firm to establish policies and procedures for retention of something. The retention period of audit engagements ordinarily no shorter than from date of auditor's report or later the date of auditor's group's auditor report. They're talking about retention of some documents there. What they have to document: audit evidence, audit documentation, engagement documentation. I think it's mostly engagement documentation. Why? Because that's what we prepare from calculate the time period of from after signing of the auditor's report. So SQC1 also falls good to establish policies and procedures, and the retention period was 7 years. Yes, option C is most appropriate answer. SQC1 requires firms to establish policies and procedures for retention of engagement documentation. That retention period is no shorter than 7 years from date of auditor's report. Hey Samson, this is Riya from Samaya, MCQ 172, CA Inter. An important factor in determining form, content, and extent of audit documentation of significant matters is the extent of, out of this four, in exercised in performing the work and evaluating the result. See, the audit documentation depends upon what? What are all the factors like size, nature, and complexity of the entity or transactions. As per his professional judgment, he has to, auditor's professional judgment, he has to determine the form, content, and audit extent of the audit documentation. So option A is most appropriate. Hey Samson, this is Shreya from Samaya, MCQ 173, CA Inter. The auditor may consider it helpful to prepare and retain as a part of audit documentation a summary, which is a completion memorandum. Why? What does completion memorandum consist of? It consists of the manner how significant matters were addressed by the auditor, and also describes description of the significant matters that were found during that engagement. We'll see what does it or describes options. The evidence identified during the audit. No, it's evidence is the audit documentation. That significant matters identified, only the significant matters and how they were addressed. Option B is most appropriate answer. Hey Samson, this is Shreya from Smaya, MCQ 174, CA Inter. Auditor, while obtaining management experts work, while using the work of the management expert, what all the things he has to evaluate? He has to evaluate competence, capabilities, objectivity of the expert, yes. Obtain understanding of the work of that expert, yes. Evaluate the appropriateness of expert's work as audited evidence. All the three. All the three he has to check. We'll see which option stands true. Option D. Option D is most appropriate answer. Hey Samson, this is Rio from Samaya, MCQ 175, CA Inter. While doing tests of controls, that is, we are auditing the internal controls of the entity, what the auditor has to do. What he has to check, he has to check whether how the controls were applied at relevant times during the period of or under the audit. Period under the audit, yes, he has to check. And the consistency of the internal controls are to are applied and by whom or by what means they were applied. I think all the three we have to check. So the most appropriate answer is option C.